Hello, and welcome back. Welcome back. My name is Breon Mills, and I would like to welcome you back to this ongoing training on support and resistance. Today, we're going to talk about part 3, trading wedges. Okay. Now, what is a wedge pattern? A wedge pattern is a price pattern marked by converging trend lines on a price chart. The two trend lines are drawn to connect the respective highs and lows of a price series over the course of 10 to 50 periods. The lines show that the highs and lows are either rising or falling in differing price. All right. So today, what we're going to talk about is the rising wedge and the falling wedge. Okay. All right. The rising wedge. Now, a rising wedge is a technical indicator suggesting a reversal in pattern frequently shown in bear markets. This pattern shows up in charts when the price moves upward with the pivot highs and lows converging toward a single point known as an apex. One thing experienced traders love about this pattern is that once the breakdown happens, the target is reached very quickly. Unlike other patterns where a confirmation must be shown before a trade is taken, wedges often do not need confirmation. They normally break and drop fast to their targets. All right, now let's take a look at this chart. All right, CLPR. So when we first look at this chart, what do you think or what do you see? All right, so we do recognize that it's a bearish pattern. Okay, so there's a bearish pattern. And we had a huge drop off. Okay, we had a drop off and we've had a slight rebound, right? All right, so now let's draw our wedge. Okay, so when drawing a wedge, we're going to start with our support down here at the bottom. All right, we're going to start with our support down here at the bottom, and we're going to draw our line connecting the bottom support candles here all the way across to the support candles all the way to the far right. Okay, the next line we're gonna draw is the resistance line. So we're gonna take the top candle here and we're gonna draw this line across here, making sure we touch a few candles along the way, and then we're gonna draw our converging lines. Okay, now as you can see, as the previous slides have shown, all right, we are in a bearish pattern. We had a huge fall off, and then we had a reversal in pattern. All right, now we have a lot of sideways trading, right? But what do we have here? Lower highs. Okay, this high, we have lower highs here, and the stock price is actually converging into an apex. And once it hits its apex or gets close to the apex, we can quickly make a decision. Well, this is where we want to jump in at. Okay, we could quickly make the decision to jump in here, set our stops. All right, and we know based on charts and based on history and based on experience, once the stock reaches its apex, it is going to fall off a cliff, all right, or retrace some. So we can set our entries here and hopefully ride the price down. Okay, all right, this is a zoomed in pattern. All right, so we do have some slight continued downtrend here. All right, again, we could do call options or we could short the stock here. All right, great opportunity. Easy stuff. All right, now let's take a look at the falling wedge. Now the falling wedge could either be a reversal or a continuation signal. As a reversal signal, it is formed at the bottom of a downtrend, indicating that an uptrend will come next. Unlike the rising wedge, the falling wedge is a bullish chart pattern. All right, now let's take a look at this chart here. Now, when we first put our eyes on the chart, what do we see? We see a bullish pattern. Okay, all right. We also recognize that here at the top, we had a slight pullback. All right, and that is where we can decide or determine, okay, all right, there's a slight pullback here. We had a high here. Let's draw our wedge. Okay. Again, you know, when we draw on a wedge, we start with the support. We establish support coming across. And then we start from the high candle and come all the way down here, all right, to the apex. And we can easily see here, we can see the lower highs, all right. And also we can see some lower lows coming along, and we can see some sideways trading, all right. And if you are familiar with candlesticks, you can identify this candle here as the hanging man candle. All right, so we can surmise that this will continue to come down and trade within here, right? All right, so let's zoom in a little bit. All right, we can surmise that we're gonna have some more trading within the wedge. All right, and once it reaches its apex, we can see a springboard upward momentum. All right, continue uptrend in this stock. All right, and it is just that simple. All right, when you get an opportunity, you can go to finviz.com. All right, and you can go to chart patterns and check out the wedges. All right, wedge up, wedge down, and see if you could start identifying and picking up these patterns. Okay, everything comes with practice. The more you practice, the better you will become at recognizing these wedges and looking for opportunities where you can greatly profit. Okay, wedge patterns are usually characterized by convergent trend lines over 10 to 50 trading periods. The patterns may be considered rising or falling wedges depending on their direction. These patterns are unusually good track records for forecasting price reversals. All right, so there you have it, wedge patterns. All right, falling wedge, rising wedge. Again, go to your favorite stock chart websites and start pulling up some wedges. All right, and start getting some practice identifying them, and you know, continue just putting in the work. All right, positioning yourself for success. Okay. All right, hey, look, I would like to say thanks. If you're a first-time viewer, make sure you subscribe to the channel and come on back for more of this wealth building information. Peace.